Hello everybody, welcome to episode 3 of my weekly update and Q&A. I'm Mads, a property developer with over 150 mil in completed projects. I build super homes around the world for billionaires and royal families. And here at home in the UK, I've started a passion project to build a 100-unit property portfolio from scratch using none of my own money to prove that anybody can do it. In this video series, I start every video by answering your questions about property development and investment. So if you've got one, please drop it in the comments and I'll answer it next week. Then I'll share a challenge or something big from the week that we faced in our developments and how we overcame it. Today, I'm going to talk about exchanging contracts on a deal without funding finalized, which, as any lawyer would recommend, is not always the smartest idea. And then I will go on and update on our other 100-unit challenge projects. Look, if you are new here, I started in a garish branded yellow Volkswagen Beetle selling buy-to-lets in North London. 25 years later, I'm a pretty experienced property developer delivering global trophy homes, and I'm sharing everything I've learned along the way. This series is about giving unprecedented access to the usually secretive world of high-end development and showing you deal by deal how to build a property portfolio from zero. So whether you're just starting out or ready to scale and rock and roll, these strategies apply. So let's get straight into the questions. All right, this is last week's video about the Portuguese mansion development, and there's 3 questions. First up from George M. Subscribed. Feel fortunate to be early to the channel. How and when are we eligible to submit questions? Mate, George, anybody and everybody is eligible, mate. To just, if you have a question, thanks, just drop it into this week's video and I'll answer it next week. And mate, thank you for subscribing. I truly appreciate it. Next up, The Den. Thank you. Not a property developer, but keep sharing knowledge. Be honest and authentic. What did I reply to The Den? I said, make sure you follow the video series. I can see you have a lot to learn. I think it's a very common, he is commenting on the fact that I did a video about the development that we're doing in Portugal, which we're doing as development managers, as on behalf of somebody else. So we don't own the assets. And I was advising how it's not always, you don't always have to, as a developer, you're responsible for taking something from here to there, delivering on the vision and creating a value uplift. And of course, you can have any definition you like for it, but the asset is property and you are taking it from one place to another through a whole series of challenges, and you are creating value and you are remunerated based on the value that you've created ultimately. And development management is something that some of the biggest developers do out there, like the Whitley's shopping centre is being done by Finchatton, for example, as development managers, or they've done the Grosvenor Square developments in Mayfair. Just because you don't own the asset doesn't mean that you're a property developer, and it's also a fantastic way for developers to also improve their cash flow, because when you do development management, you're typically paid on a monthly basis as part of each valuation with the contractors, and then you typically have an uplift at the end, which means that you benefit in the upside from the development. So you are definitely a property developer if you're doing development management, and I would urge anybody to focus on it if they have the skill set, because you need to be the best of the best to do development management. People will seek you out to do development on their behalf. It could be family offices, it could be rich clients, it could be companies, it could be anybody. But if somebody's got an asset that they need developing, they will go to an experienced property developer who will act as a development manager to take that challenge on. All right, next up, Elias. I like your page. Regarding the passion project, this occurred to me a few months back as well. Though my question is, how do you proportion the equity between all the players, as in builders, electricals, and plumbing? I assume they won't be paid up front, but rather given equity. So I think what Elias is saying is, if you bring in your team, your contracting team or your professional team into the development and instead give them an upside, how do you structure that? I don't think it's feasible or possible to only give them equity. I think you have to structure, because a lot of these players are quite small operators, and it's normally can be quite a long period of return, and you don't want to be in a situation where you've got some of your contracting team, or who are chasing you for the exit, because you want to be waiting for the right sale price. If you're not getting the price that you want, and you think, well, I'm going to wait another 4 months to get the right price, or I'm going to do this, whatever the strategy might be, you don't want to be in a position where you're forced to sell to benefit your team that you've brought in. So typically I would always agree terms with them, agree to pay them, and you want to pay them so they get paid whatever, and then you can give them you can give them an upside. So if it sells at above a certain price or within a certain time scale, or they get a bonus which would be akin to actual equity. But I wouldn't actually hand over equity to the professional team. I would just structure it in some way that they are rewarded based on the success of the project. You don't want to lose control. You don't want to be chased by anybody. You also don't want to be second guessed by anybody. Why did you install a gold bathtub in the bath? That's this, and that affected the profit margin, blah blah blah. You as a developer need to be totally in control of all that stuff. So you need to keep it a little bit at an arm's length to make it to sleep well at night, but also keep everybody else happy. The last thing you want in any of this is dispute. Dispute is something that should be avoided at all costs. Right. Okay, so what's next? Let me get into the meat and to veg of this video. In this video, I just want to talk a bit about our latest 100-unit challenge acquisition. So we have this property that we are literally about to exchange contracts on. And I mean literally when I say it's going to happen tomorrow, I hope, if the seller can get their side of the contract signed. But I want to tell you about why I've decided to exchange contracts on this purchase without actually having my funding in place. For those who don't know, in the UK property market rather, neither seller nor buyer is committed to the transaction until contracts are exchanged. But when you do exchange, you typically pay 10%, which is non-refundable. You can also exchange contracts on a conditional basis, i.e. the contracts are exchanged, but it is conditional on certain factors. But this is tricky, and it negates the whole point of the exchange because there is no certainty. You can use a conditional exchange to your advantage in some circumstances, and I have tried it, and I did try in this case actually, but it was rejected by the sellers, and rightly so. Once you've exchanged contracts, a completion date is then agreed. And that is when you pay the rest of the funds, with typically most coming from the lender, and then you get the keys to the property. So you would normally never commit to exchanging contracts and paying the 10% deposit without having your funding, i.e. your mortgage, totally lined up and the T's and the I's dotted and all that. The lender's due diligence process can be summarized in 3 parts. Firstly, they do checks on you and the entity in which you're buying the asset. So that's an SPV. They want to know who is it, who owns it, anybody been bankrupt, what's going on, are they all UK registered, etc. Then they do a valuation on the property itself, which you pay for, but that's also a good exercise anyway as well. It's not always a good exercise, but normally it's a good exercise to hear their opinion as a second check on it. And then finally, the lenders do their own legal checks on the property, known as lenders' inquiries. Now, in my case, the property that we're buying for the 100-unit challenge is a commercial unit in Kent. And it has a national retailer in the form of an opticians as a tenant. But their 15-year lease is about to end. And it's part of our development strategy to renegotiate this lease, or the terms of this lease, to our advantage, allowing us the opportunity to develop other parts of the building. And I'll go into this in much more detail in another video. But for us, timing is absolutely key. And we need to exchange contracts so that we can legally take over the negotiations with the commercial tenant. But we're at the stage where we had the offer from the lender saying they are agreeable to lend to us, but they still need to do their legal inquiries. And we know from past experience with this particular lender, that could easily take 3 to 4 weeks. And in terms of the sellers, we don't have 3 to 4 weeks, but mainly because we're too close to the commercial lease for negotiation to wait 3 to 4 weeks. So we just don't have this time. So if we choose to wait, the deal will fall apart and we will have lost it. I think that the sellers will then go on and negotiate themselves and it probably won't come to the market, or it may do in the future, but not for the price that we're paying. So we decided to go against the advice of our solicitor and offer exchange of contracts with the lending not yet finalized. So what is key here is, what did we do to manage those risks? Firstly, we negotiated that the deposit paid on exchange went from 10%, the typical 10%, down to 5%, hence reducing our financial exposure if the worst were to happen. Secondly, we also had a very frank chat with the sellers to see if there was any skeletons in the closet. This is, of course, just down to trust. But we always believe in relationship building rather than bulldozing. And that is the way that you develop relationships with people. And it means there is an element of trust in place, and you need to be able to read people. Of course, nobody can do that with any considerable certainty, but sometimes you've got to trust your gut, and you need to be able to get a reading of people to see if they're trying to hide something from you or not. It's a strong life skill to have regardless. And then thirdly, we engaged a surveyor to analyze how they expected the lease renegotiations would go, because it's not the simplest of procedures. And even though we've got quite a lot of experience in it, we wanted a professional to really see that he thinks this is the strategy of how it will go after we've exchanged, to make sure that suddenly we don't exchange contracts and then we end up in court with the tenant. That's something we wanted to make sure we avoided. And then fourth, we analyzed everything there could possibly be with our solicitor, and what unknowns could there be. I mean, this is obviously rather finger in the air, but it did help narrow our concerns down further. And then when we decided to offer the unconditional exchange of contracts, we had really checked everything that we could check, unless there's someone out there, smarter than us who could think of something else. But we felt like we'd negated as many of the risks as possible. And if we didn't go ahead with the exchange, the timing would have fallen apart. We would have lost the deal. So sometimes you just have to take risks. And I take risks in property development, but you have to take risks in business. But you must take calculated risks. And we analyzed the worst case scenarios against the possible gains. And it made sense to us to do that. We expect this transaction to make us between 150 and 200% return on our invested capital. So we decided to go for it. And I'll do a fully detailed video with all the numbers on this development soon. And once we complete, it will add another 3 units to our 100-unit challenge portfolio. And I think it will be a little gem in our portfolio for many years to come. All right. Talking of which, let's do a quick review of the other projects in our 100-unit challenge. Right, so here we go. These are our live deals, shall we say. So Tedworth and Surrey, like mentioned before, we've been rejected 2 times. Well, technically 3 times with planning on this one, and we're going back for more. We are now doing the 3rd round of planning, but we're also submitting an appeal, and we are still waiting for what's called a unilateral undertaking, which is a document that we need to sign to confirm that we will be intending to build it out ourselves, or we will be building it on behalf of an eventual purchaser, which is a little trick to get around the planning, and I'll talk more about that in the future. But we are chasing on that one. Same down in Reigate in Surrey, we're still waiting for the 2nd round of pre-app advice that we're going to get from the local council down there, to decide how we're going to proceed on that one. That's the big whopper, nearly, what is it going to be now, 7,800 square foot single house. But we are looking into possibilities of doing it as a semi-detached, so it's going to be 3,500 square foot houses, or 2 detached 3,000 square foot houses. We're looking at underground parking. There's a lot going on there. There's a lot of trying to get the measure of the council to understand what it is that they would support, so that when our planning goes in, we've got the smoothest ride through. It's the area, it's Surrey, like the Tedworth one. The NIMBYism is off the scale in that part of the world. But yeah, what can we do? All right, This is one deal in Kent that I just spoke about. We are going to exchange on that one, I hope, tomorrow. Again, I'll do a full video on that one. Very interesting strategy that we have on that one. Big returns, fully funded with investors from the show. And then down here we have our big unit. It's our 8-unit block that we are getting closer to getting over the line down in Newbury in Berkshire. Again, hopefully going to exchange on that one soon and do a full video. Right up for me now, as I've got the talking about deal again. Here is the contract that I need to sign and return in readiness for exchange of contracts tomorrow. I sent the funds on Friday, and I am frothing at the bit to get this one over the line. Right, let's have a quick review of the stats. All right, new investors this week on our mailing list. There was one new individual who reached out to us looking to invest. Just if you're interested, send me a message on Instagram. It's the best one to do it. Just DM me invest and I'll be in touch and we'll figure out what it is that you're interested in doing, and we'll add you to the mailing list. And this is the mailing list. So we now have 35 investors on our mailing list. And this is where we send out projects that we are have in our pipeline. If you'd like to invest alongside us, you can learn and earn, as we call it. Makes so much sense to invest in assets nowadays. I mean, I can do a whole nother video again about what's happening in the UK. It's an absolute shit show. It's the only thing that you can take control of, really, is owning assets. AI can't own real estate. Well, maybe it can, but not in this sense. All right. New mentoring clients. Yeah, I'm going to start mentoring. We pushed it back now. I'm going to start mentoring some people from November the 1st. So I will put them in there when we get on with that. There's no wait list because I haven't opened up the wait list. Instagram followers. Where are we now? This is important. This is important for profile. If you've been following us, you'll know that I've got my development management job in Portugal via Instagram. It is the gateway to the world. And it is an incredible asset that you should be utilizing to talk about your skills and what it is that you can offer. Investors, development management clients, endless opportunities. LinkedIn, great market, great tool to reach investors. What have I got? I got 3,182 followers now. It's gone up slightly from last week. YouTube subs, as you know, this is the 3rd video on the YouTube channel, and what are we at now? 128. So we got a few more legends on the subscription list. So thank you very, very much to those who follow. Bloody love you for it. So next week, flying out tomorrow morning. I got a week in Mallorca with the family. Not the best timing, trying to exchange contracts on that deal tomorrow, but it is what has to happen. So a week in the family with Mallorca, trying not to get in trouble with my wife for working. I've got to get the deal exchanged, as I've been speaking about above, and then I need to refinance the Copenhagen project. Again, I'm just waiting back on numbers on that one. I can talk you through what we did on there. This was a house or a project in Copenhagen that we bought in May. We finished the refurb in August, so just 4 months. Quick turnaround. Didn't spend that much money on it, and I think I have at least doubled the invested capital in this project. But I don't want to say anything and take the refinance numbers back. But I'll do the numbers on that one and show some videos and stuff of how it looks. Pretty cool little spot in northern Copenhagen. And that is it. Look, please, any questions, drop them down below and I will love to answer them next week. Have a banging week. I hope you succeed in whatever you're doing. Thank you so much. Cheers.